Donald Trump removed Nicolas Maduro. The world celebrated, but almost nobody noticed what happened next. Because while everyone was watching the dictator, the United States quietly gained something far more valuable. Not Venezuela's government, the power to decide who profits from the largest oil reserves on Earth. China spent nearly 20 years building influence inside Venezuela. Could Trump destroy it in just a few months? Or is this the beginning of an even bigger conflict? Imagine discovering the largest proven oil reserves on Earth. More than Saudi Arabia, more than Russia, more than Iran. Most people would expect that country to become unimaginably wealthy. Instead, Venezuela became one of the greatest economic disasters of the modern era. By 2020, its economy had contracted by roughly 3/4 compared to its peak. Millions fled, hyperinflation destroyed savings, entire supermarket shelves stood empty, hospitals lacked basic medicine. The country with over 300 billion barrels of proven oil reserves could barely keep the lights on. How is that even possible? Most explanations are surprisingly simple. They had socialism, they had corruption, they had Maduro. Those explanations aren't wrong, they are just incomplete. Because none of them answer the question that actually matters. Why did every government keep making the same mistake? To understand that, we need to travel back long before Maduro, long before Chavez, to the moment oil changed everything. Oil itself wasn't Venezuela's problem. Oil has made countries like Norway incredibly wealthy. The difference wasn't the resource, it was the incentive structure surrounding it. Praxeology begins with a very simple observation. People act, and they usually choose the path they believe will help them achieve their goals most effectively. Now imagine you are an ambitious entrepreneur. You have two options. Option 1. Build a business. Convince thousands of customers to voluntarily buy your products. Compete with ideas. Take enormous financial risks. Maybe succeed, maybe fail. Option 2. Gain influence over the institution that receives billions of dollars in oil revenues every year. Which path suddenly looks more attractive? This is where Venezuela quietly changed. The state stopped being merely a referee. It slowly became the biggest business in the country. If you controlled the government, you controlled the oil. If you controlled the oil, you controlled foreign currency, imports, government contracts, jobs, credit, power. And once political power becomes more profitable than productive enterprise, something remarkable happens. The country's brightest mind gradually stop asking, how do I create value? They begin asking, how do I gain access? That is the real resource curse. Not that oil exists, but that oil makes political control extraordinarily valuable. And once that incentive exists, it spreads through the entire economy. When Hugo Chavez entered office in 1999, he didn't create this incentive, he inherited it. For decades, Venezuela had already become increasingly dependent on oil revenues. By the late 20th century, oil generated the overwhelming majority of export earnings. The state had become the central distributor of wealth. Chavez simply took that logic much further. Private companies were nationalized. Price controls expanded. Currency controls followed. The state tightened its grip over PDVSA, the National Oil Company. Supporters called it economic justice. Critics called it socialism. From a praxeological perspective, something else happened. The incentives changed again. If prices no longer coordinate production, politics begins coordinating production. If entrepreneurs cannot freely allocate capital, bureaucrats will. And bureaucrats don't allocate resources according to profit and loss. They allocate them according to political priorities. The economy slowly stopped answering one simple question: what do consumers actually want? Instead, it answers another: what does the government want? That distinction sounds small. It isn't. It changes everything. Because markets reward those who satisfy consumers. Politics reward those who satisfy politicians. And over time, those are rarely the same people. By the early 2000s, Venezuela still possessed the largest proven oil reserves on Earth. But something else had quietly begun. Another superpower was watching. Not Washington, Beijing. While Western investors were becoming increasingly nervous, China saw an opportunity worth tens of billions of dollars. The question is, what exactly was China buying? Because it wasn't just oil. By the mid-2000s, Venezuela was becoming increasingly isolated. Foreign investors were leaving, political risk was rising. Western governments became more skeptical. Then China arrived. At first glance, it looked almost charitable. Billions of dollars in loans, infrastructure projects, power plants, railways, oil investments. By the end of the following years, Chinese financing agreements with Venezuela would exceed $60 billion. Most people tell this story like this: China wanted cheap oil. That isn't wrong, but it's far too simple. China wasn't buying oil. China was buying time. It was buying influence. It was buying options on the future. Because unlike politicians, oil doesn't disappear after an election. Government collapse. Currencies collapse. Presidents disappear. Oil remains underground. From China's perspective, this wasn't a bet on Maduro. It was a bet that Venezuela would eventually recover. And when it did, China wanted to be first in line. That wasn't ideology. It was called economic calculation. Here's where the story becomes fascinating. China didn't simply wire billions of dollars to Caracas. Many of those loans were backed by future oil deliveries. Think about what that means. Imagine lending someone $10 billion. Normally, you hope they'll repay you. China did something different. It said, don't pay us with money, pay us with oil. At first, that sounds incredibly smart. Oil has value. Oil can be sold. But it doesn't suffer hyperinflation. It looked almost like the perfect collateral. Until reality intervened, because something unexpected happened. Venezuela wasn't running out of oil. It was running out of the ability to produce it. This may be the biggest misunderstanding in all of economics. People think oil creates wealth. It doesn't. Oil creates potential. There is a world of difference. Imagine discovering gold beneath your house. Are you suddenly rich? No. First, you need machines, workers, roads, capital, legal certainty, engineers, electricity, transportation, refineries, and above all, something willing to invest billions of dollars today for profits that may not arrive for another decade. Oil underground has no market value until human action transforms it into something useful. That's pure praxeology. Resources never create wealth by themselves. People do. And Venezuela slowly destroyed the very institutions that made those people willing to invest. Property rights became uncertain. Price controls distorted investment. Political risk exploded. Foreign capital fled. Experienced engineers emigrated. PDVSA became increasingly politicized. The result was astonishing. The country with the largest proven oil reserves on Earth produced less and less oil every year. By the late 1990s, Venezuela was producing roughly 3.5 million barrels per day. A quarter century later, production had fallen to roughly 1.2 million. Not because the oil disappeared, because the incentives did. China had secured future oil deliveries, but paper contracts cannot repair pipelines. They cannot train engineers, they cannot attract investors, and they certainly cannot replace functioning institutions. Suddenly, China's brilliant strategy didn't look so brilliant anymore, because Beijing had secured claims on an economy that was no longer capable of fulfilling them. For years, China could be patient. There was no urgency. Maduro remained in power. Western sanctions kept competitors away. Eventually, China assumed the oil would flow again. Then January 2026 happened. Within days, everything China had patiently built over nearly 2 decades was suddenly thrown into question. Not because the loans disappeared or the oil disappeared, but because someone else was now beginning to control the gates through which that oil reached the world. And that someone was Donald Trump. Most headlines claimed Trump wants Venezuela's oil. But that's actually the least interesting part of the story, because Trump doesn't need to own a single oil well. He only needs to control something far more valuable: the cash flow. And once you understand that, you'll understand why China suddenly found itself playing defense. Let's begin with something that sounds completely absurd. If Donald Trump wanted Venezuela's oil, why did he repeatedly say that America doesn't actually need it? Because he's right. The United States is already one of the world's largest oil producers. Thanks to the shale revolution, America transformed itself from a country heavily dependent on imports into an energy superpower. So why risk diplomatic conflict? Why confront China? Why get involved in one of the most unstable countries on earth? Because this was never primarily about producing more oil. It was about controlling where strategic oil flows. Those are two very different things. Imagine owning a gold mine in the middle of the desert. The gold is yours, but you don't own any trucks or any roads or own a refinery. You don't have insurance. Banks refuse to work with you. Shipping companies won't transport you gold. Nobody's willing to buy it. How much is your mine worth? Almost nothing. The exact same principle applies to oil. Drilling is only the first step. Oil must be financed, insured, transported, stored, refined, sold, paid for. Every one of those steps depends on institutions, banks, insurance companies, shipping firms, commodity traders, payment systems, international law. The wells may belong to Venezuela, but without access to those institutions, the oil never becomes income. And this is where Trump made his move. He didn't need to nationalize Venezuela's oil fields. He simply gained influence over the gateways connecting Venezuelan oil to the global economy. Licenses, sanctions, financial clearing, shipping approvals, access to Western markets. Suddenly, the world's largest oil reserves became far more valuable, only if Washington allowed them to become valuable. That's an extraordinary form of power, not ownership, control. Most headlines framed the story like this: America's taking Venezuelan oil away from China. Not exactly. China can still buy oil. China still has investments. China still has relationships. What changed? It's something much more important. For nearly 20 years, China expected Venezuela to repay enormous loans through future oil production. That repayment mechanism suddenly became uncertain. Imagine lending someone $60 billion, secured by future harvests. Then another country suddenly controls who can sell those harvests, where they can sell them, and how the money is distributed. The crops still exist, but your security has changed dramatically. That's China's problem. Trump didn't confiscate China's assets. He changed the incentives surrounding them. And incentives change behavior. Now, let's talk about something almost nobody outside the oil industry discusses. Not every barrel of oil is the same. American shale oil is relatively light. Much of Venezuela's crude is extremely heavy. That matters, because many refineries along the US Gulf Coast were designed decades ago, specifically to process heavy crude. Those refineries don't simply want more oil, they want this oil. That's why Venezuela still matters, not because America lacks energy, but because certain parts of America's refining system become significantly more efficient with Venezuelan heavy crude. Suddenly, the story changes. This isn't about feeding America. It's about optimizing America's industrial infrastructure. A single barrel can become strategically valuable, not because of its quantity, but because of its quality. Now we finally arrive at the biggest misunderstanding. People think nations fight over oil. History suggests something different. Nations fight over the cash flows generated by oil. The oil itself has no opinion, no ideology, no flag. Its value depends entirely on the institutions surrounding it. Who grants licenses? Who protects contracts? Who finances production? Who insures the tankers? Who clears the payments? Who decides where revenues go? Control those decisions, and you don't need to own the resource. You control its economic life. And that's exactly why Venezuela suddenly matters again. Not because someone discovered new oil. The oil has always been there. What's changing is who controls the rules around it. But this creates one final question. Let's imagine Venezuela becomes politically stable. American companies return. Production doubles. Oil begins flowing again. Does Venezuela automatically become rich? History gives a very uncomfortable answer. Not even close. Let's imagine the best possible scenario. Maduro is gone. Sanctions continue to ease. American companies invest billions. Production starts climbing again. Oil exports recover. Everything seems to be moving in the right direction. So, does Venezuela finally become rich? Most people would answer, of course. History says, not so fast. Because this is exactly where almost everyone misunderstands wealth. Oil doesn't create prosperity. Oil creates cash flow. Those are not the same thing. Cash flow can finance prosperity, or it can finance political power. The difference isn't the resource. The difference is the institution that controls it. Let's compare two countries, Norway and Venezuela. Both discovered enormous oil reserves. Both could have become resource-dependent states. Yet today, one consistently ranks among the wealthiest societies on Earth. The other experienced one of the worst economic collapses in the modern history. Because Norway gradually built institutions that treated oil as capital, not as political income. The government doesn't simply spend every krone earned from oil. Much of it flows into a sovereign wealth fund. The money is invested globally. The fund owns productive assets all over the world. The goal isn't today's election, it's the next generation. Now compare that with Venezuela. Oil revenues increasingly became government revenues. Government revenues became political power. Political power became the fastest path to wealth. Do you see the difference? Norway used oil to strengthen institutions. Venezuela allowed oil to replace them. Now we arrive at something Ludwig von Mises warned about more than a century ago: economic calculation. Every entrepreneur asks the same question. Will this investment create more value than it consumes? Markets answer that question through prices, profit, loss, competition, consumer choice. But what happens when investment decisions become political decisions? Suddenly, success is no longer measured by profit. It's measured by influence, by strategic importance, by political objectives, by national prestige. Governments can absolutely build factories, pipelines, oil fields, entire industries, but they cannot easily know whether those resources are creating more value than they destroy somewhere else. Because without genuine market prices, economic calculation becomes increasingly difficult. That's why two countries can have the same oil and produce completely different outcomes. The oil didn't change. The information guiding human action did. Now comes the uncomfortable question. Trump may have removed Maduro, but has Venezuela escaped its self-resource curse? Or has the price simply become more valuable? Think about the incentives. The world's largest proven oil reserves, hundreds of billions of dollars in the future revenues, American interests, Chinese interests, European interests, domestic political interests. That's an enormous price. And whenever political power controls an enormous price, people will compete for political power. Not necessarily by creating value, but by controlling access to value. That is exactly the incentive that trapped Venezuela before, which means something fascinating. The biggest danger after Maduro may not be another socialist revolution. The biggest danger is failing to change the incentive structure that made political control so valuable in the first place. The world keeps asking, who owns Venezuela's oil? That's the wrong question. The better question is, who controls the institutions that determine what happens to that oil? Because ownership without institutions means very little. A country can sit on 303 billion barrels of oil and still become poor. Another country can have far fewer natural resources and become extraordinarily wealthy. Natural resources don't decide that. Human action does. The institutions surrounding that action do. And the incentives those institutions create determine whether people spend their lives building businesses or capturing governments. Trump may have changed the geopolitical balance. China may lose influence. Oil companies may return. Production may recover. But none of those things answer the most important question. Will Venezuela finally become a place where creating wealth is more rewarding than controlling the state? Because if the answer is no, history won't repeat itself. It won't have to. The incentives will do it for us. Maduro is gone. China is under pressure. Trump has changed the game. But the future of Venezuela won't be decided by who controls the oil. It will be decided by whether Venezuela finally builds a system where entrepreneurs are more powerful than politicians. Because throughout history, the richest nations were never the ones with the most resources. They were the ones where the greatest rewards came from creating value, instead of capturing power. And perhaps that was Venezuela's real tragedy all along.